Well, and welcome to this year's first update of 600 seconds of trading. My name is Alejandro Zambrano, Chief Market Analyst with Amana Capital and TradeCaptain.com. I want to welcome you guys to this first update of the year, where we're going to take a look at the main markets such as Eurodollar, Bitcoin, crude oil, gold, and the DAX 30. Before we start though, as always, I need to stress that trading financial markets is unfortunately risky, and there's a genuine risk that we'll lose more than our invested money. So please bear that in mind before you start trading. Good, so let's begin, and we're gonna begin with the euro, as we usually do at this time of the day. So here's the euro, and you're looking at a daily chart, and as you might remember, the euro was quite boring heading into the end of the year, really. But we had a nice little break to the upside, and as you know, I was stressing for a very long time that if we take out 119.64, that this market could rally higher to 120.93. You can see here how we had a nice break to the upside. I know it happened on the 29th of December, but there's nothing bad with trading over the Christmas period. Liquidity and volatility tends to decline, so we could have some false moves. But when you see synchronized moves, I mean, if you would have watched the Aussie dollar, the New Zealand dollar, the pound dollar, and the euro dollar, then you could use that information to actually take on some positions. Now, obviously, if you see just the euro dollar breaking to the upside and everything else not moving, then that's an indication really that something is wrong. Now going forward here, again, we took out the high, so I think up here at 120.93 traders my book profits. However, though, I actually suspect this market could trade much higher. So I think it could be clever to hold this position for slightly longer and instead look for further gains, because if we take out 120.93, then we take out last year's high, and if we take out last year's high, this market can go up to 124, maybe 126 in a period of 2 to 3 weeks. So I'm gonna leave that up to you, but if we take out this high, then I do think we're gonna continue to move higher and push to the upside. So what if you're not already long then? Well, at that point we could just maybe focus on the short-term chart. So this is a 1 hour chart, and I'm just gonna get rid of this line here and this here. And now which is the level that people are focusing on for stop loss orders? Well, I think traders that went long here at 1964, they have stop loss orders at 1841 down here, and we can take a fib from this low here to this high. You have these 3 fibs. You can also load the 4-day EMA is pretty much up here. So I think if we have some sort of a test of the breakout level, I'm looking at specifically at 1971, then I think this market could continue to head to the upside. So it's very straightforward, looking for this to continue to move up higher in the next few days and weeks, well, few days actually. And that's it really. When I maintain a bullish bias, if we come back down to the breakout level, I do suspect here is going to go long. For now, just enjoy the ride. Let's see how far this can go. Okay, that is the euro versus the USD. Here's the price of Bitcoin. Now, the price of Bitcoin, I made some assumptions. So traditionally, when price declines, it will decline with, like here, for example, this is a 28% decline. And this is a 23% decline, and I think on average, worst case, I mean at least for 2017, we're talking about 30-40% decline. This is a 38% decline, and if you put on the logarithmic scale, you'll see more of these declines, so about 40% or so. That tends to be it, and then the market bottoms out. So with that in mind, I said that this is a 43% decline. So we have 43% decline and then a nice spike to the upside. So we can assume two things. So we can at least work with that idea. And the first idea is that we're not going to trade much lower than this level. So with that in mind, I said probably between 14,000 and 11,000 traders are probably going to look to buy. So between these two levels, right? So far we've seen some sort of reaction, kind of seeing what I wanted to see, but we haven't necessarily seen that strong move to the upside. So here I said it depends on your strategy, but for example, one could buy, I have a specific money pot that I just trade cryptos with. So you can put 20%, 30%, kind of up to you really, depends on how you trade the markets, but this is just the way I do it. So right now in cryptos, I'm 50% in cash and 50% in different cryptos. So here one could buy slightly with a stop loss here, or in my case I just bought here, and obviously if it declines a little bit more, even if it breaks this level, I'm not going to worry too much. And then the idea is that when this market finally breaks this downtrend, I'm going to add more. And we're starting to see some interesting sign. I don't know if you saw Ethereum, but Ethereum moved and is already at its prior high. That market nicely bottomed out. And then you have other markets as well. You got like Litecoin hasn't necessarily bottomed out yet, but it's trying to. You have Monero and a bunch of these different coins, Bitcoin Cash, that kind of already start stabilized. But the interesting part is the fact that you have Ethereum that has nicely ended its downtrend, and maybe will spill over to other markets. We'll see. In either case, I'm bullish from 14,000, and I'm gonna be bullish between 14,000 and this level here, which is the spike, what level we spiked down to. And I suspect the market's gonna try to bottom out here. Now this is the price of, let's focus on the crude oil first. So this is crude oil, and here as well, it was a very boring market, but we said take out the high and this market could push to the upside. That worked out fine actually. Moved all the way up, and you got the 61 level, or 61.25, which is a very important high. Obviously take that high out and we can continue to rally higher. However though, I think it makes perfect sense really to book profits up here at 61. You might remember we said look to buy here for this to head to the upside, actually here, and so far it's looking good. The market is up with about 3% since then, which is really good, and I think it can go down a little bit maybe, but I think eventually it's gonna go up. Here, because it's a volatile thing, I do prefer being bullish from 59.03, and want to be bullish as long as trade above 57 and 56. And here's the price of gold. Here gold caught me by surprise. I was bearish, got stopped out on that, and the market is now trending to the upside, and it feels that we've been left out here in this market. There's not too much we can do. Now obviously you have Aussie dollar, New Zealand dollar, dollar CAD. These are all commodity pairs, and in particular the Aussie dollar is highly linked to gold. So I think there you could explore that, because in that pair you could probably get some nice entries. Here, this is a squeeze, short squeeze. The market was bearish and just continues to go up and up and up, because a lot of people that were short, like myself, were getting squeezed out. So a bunch of stop loss orders are getting triggered. Now, obviously, it's always possible to trade this in the shorter term. You can flip to a 30-minute, and then in the 30-minute, you can see here, this is the opening of the new year. And if it goes down a little bit, maybe to 13.06, it's possible to buy with a stop here. Gives you a $6 risk. And then if it continues to move up, so if you buy at that pullback level, you could potentially make $8 by risking 6. So it's not that bad. However though, this is a very tight and short-term bullish market to the upside. It's not really what I like to trade, so I'm actually gonna ignore this. There's ample of opportunity, not ample, but there are opportunities in the Aussie dollar and the New Zealand dollar, which I prefer better than gold. And here's the DAX. So the DAX here, you might remember, so I was bullish. The market moved to our favor, it moved up, and then it went down, and then it went all the way up. So we did good initially, but then it took out the lows. And here, when we traded below 13,000, this market turned bearish, and there was not much we could do about it at that point, except acknowledging that the bullish view here was over and this market was moving to the downside. So we took out the level here, moved down, and here I think it can continue to move to the downside if we took out this low. However, though, take a look at the S&P 500. You'll see that it's a bullish market. People want to buy that. So I'm not surprised that we're seeing the German DAX go down lower, but with the S&P being bullish, I don't think this is gonna be a nice sort of setup to trade, because you're fighting against the overall bullish current. Now, you may wonder, why is this going down? Well, I think what is happening here is that because the euro is gaining, German companies that are in the German DAX are giving up their gains. So we're seeing that move you saw, for example, in the FTSE. You might remember when the FTSE was declining on the back of Brexit. When the pound was declining on the back of Brexit, the FTSE moved up higher. Why? Because a lot of the companies that make up the FTSE 100 have income in dollars. So when the pound declines, dollar gains, suddenly these companies are making more money. Similar situation here. A lot of these firms are export oriented, and with the euro gaining, we're seeing the DAX going down. And I think that is what's happening. And when I look with former colleagues based out of Paris, that's at least the theme that they're running with. That is that because of the euro, we're seeing a weaker German DAX. Now, I don't think this is going to last forever, that correlation, but I think we can take out maybe this low. I wouldn't short it. I'd rather buy the euro. So I'd rather buy the euro, but I think if it trades below here, it can go down to maybe 12,853, and then maybe even a little bit lower. But then as we start to move down to these lows down here, I think we could potentially have some nice returns. It wouldn't surprise me if we have, like, these sort of declines you can see here, right? 8% decline, and then the market just continues to head to the upside, because the euro area and the eurozone economy is improving in general. But again, these companies, they do a lot of exports globally. So when you invest in the German DAX, you're investing in these companies that are exporting worldwide. Okay, guys, this was the main presentation here of 600 seconds of trading. The idea is to present to you guys a quick overview of the main markets here in less than 10 minutes or 600 seconds. We spend a little bit more time today, obviously, because it's the first update of the year. Now, join me Monday to Friday at this channel. As long as I'm not traveling the world, usually I travel to China and Malaysia, places like that, then we're gonna do this update. If you come here and you don't see the latest video, then just click on F5 to reload the page, and you'll eventually see this little video. What you can also do is that if you click here on 600 seconds of trading, you're gonna be sent to the YouTube page, and on the YouTube page you can subscribe to us. You can of course only subscribe if you have a YouTube account. The reason for that is that you're gonna get a pop-up, a notification. You can even receive emails when we have uploaded new videos and when we are live, so you can check that out. Okay guys, thank you so much for joining me. Don't forget to share this, don't forget to retweet, and don't forget to like us on YouTube. Thank you so much for joining me, and I'll see you guys tomorrow at the same time here for another update of 600 seconds of trading. Have a great day. Thank you.